Hello, hello, hello. Lots of faces. Hello, happy third Mini Masterclass Thursday. I'm going to let a couple more people join. Still waiting. How is everybody? I see lots of friendly faces. Hi, Christy.
Hi Sam,
Hi,
how are you
Ariel. Hi,
doing?
Mariel. Good. Hi, Julie. Hi. Hi, Diosa. Everybody, the whole team's here. This is great. I am going to share my screen. Well, no, I'll wait on that. Okay, so I'm going to get going. We've got a lot to cover today, and everyone who um, registered for this today will get the replay automatically, but it'll also go up on our YouTube channel and our website and be in our newsletters going forward. So today we are going to talk about 1099s. 'Tis the season,
Mhm.
and they are the bane of most people's existence. So hopefully we can get you some help before it's crunch time. So 1099 is the equivalent of a W-2 for an employee, for anybody, any person or business that you paid $600 or more to in a calendar year. So even if your business functions on a fiscal calendar, your 1099 requirement is on the calendar year. So first and foremost, that means that in theory, before you pay anybody even one penny, you should be requesting their W-9. Now, I know in real life that is not how it normally works, and most people don't do it until the end of the year or forget about it, but there are two sides to the coins of 1099s and W-9s. One is a compliance side. So for compliance, you are required to have the document on file if you are asked to present it, not just assume or know, etc., that a company is incorporated. For example, you have to have the form on file. I'm going to actually go through the form with you in detail today so that you can understand what it is and what it does and why you need it explicitly. But that's first and foremost. I hear a lot of companies say, well, I don't need one for them because they're a corporation. You actually do need the form to be on file for compliance. The flip side to that is the reporting of income. A 1099 is the reporting of income that you paid a person or business that is not a corporation uh, during the year. It's just like you reporting wages on payroll for your employees. There are instances when you didn't get it up front and you can't get the information from your vendor, you still can file the 1099. You can still go into a system and file it. There's almost in every software out there, there's a box that says missing information. And you can check that box and you can file. And then the IRS has the due diligence of going and tracking down who this person is and making sure they filed on their behalf. As long as you do that, you are in compliance on your end, whether or not they gave you their information. If you don't 1099 somebody who should have been 1099, there are a few things that can happen. In an audit, you can actually be fined for not having 1099 them. You can also be fined for not having the form on file. And I've actually seen these things done and happen. Every state is different, so you'd want to check in with the Department of Labor in your specific state or area to find out what those charges are. But for example, in California, it's $5,000 per vendor that you did not 1099 that should have been 1099. So it can add up quickly. You also then are out of compliance for your corporation, which makes you have to have the form on file. So you can get fined for not filing, you can get fined for not having the form on file. Now, you also, the big one, can get in an audit, their expense can be disallowed, which means because you did not 1099 them and you do not have a viable proof that they are a vendor doing work for you, that the audit can disallow their expense. An example that I've seen of this is I had a customer who was manages Airbnbs, has several Airbnbs, and she did not 1099 her housekeepers. Very clearly in scope, very clearly part of the business, but she did not 1099 them. She got fined $15,000 for not 1099ing them because there were three of them, and all of their housekeeping was disallowed as an expense, which that means it turns back into taxable income, taxable liability to you, the business owner. It's as if you just took owner's draws for that amount of money. Now, that doesn't happen every time, but it can happen, which is why you want to do the things you're supposed to do so that you don't put yourself in that position. So, two sides of the coin, compliance and reporting the income. So, you have to have the form on file, even if they're a corporation. How do you know they're a corporation? And then, how do you know you're supposed to 1099 something? That's what I'm going to do, share screen and walk you through the W-9 now to help you understand exactly what it is and what it does. So this is the W-9 form. You can get this right from the IRS website. In fact, I suggest you going to the IRS website specifically so that you get the most recent updated version. You should not ever have to pay to download. There are lots of websites out there that do $1 and you can download a W-9. It doesn't cost any money. You go right to the IRS website. And in fact, if you're one of our customers, in your resource area of your portal, we've actually hyperlinked a W-9 for you so that you can always have access to it as well. So when you engage with a vendor, there's several things you want to make sure you're doing. You want to make sure that you're following the guidelines of who qualifies to be a vendor. Every state, again, has different qualifications. Some are more strict than others, but at least federally, the minimum requirements are that they have freedom to work on their own hours and their own schedule. They are not dependent on your business's equipment to do their job, meaning they can use their own equipment or, rent their own stuff. And you can't dictate their schedule. So if you're following those three things at minimum, then you're okay. If you tell them when they have to work and you tell them that they can't use anything but your computers or your softwares, then basically they're acting as an employee and you're probably needing to shift them into that role. Again, go to the Department of Labor and you can get some clarity, or the IRS website itself to get clarity around your specific area. But if someone does qualify as a vendor, you also want to have a vendor agreement on file. The vendor agreement will then explicitly state in many ways. It could explicitly state that it's a non-employee employer relationship. The scope of work is clearly defined and it will follow the guidelines of them qualifying as a vendor. Also, if oh shoot, I just lost my train of thought. I'll get back to that. So the W-9 is the form you want to request from them up front. They will fill in their name here. If they're doing business as something else, so they could be doing business as XYZ Corporation, doing business as 123 Smith Street Corporation, because lots of businesses have subsidiaries or have partner companies or just their name, but they've elected for a doing business as license. So that's how you're going to want to store their information in your system. So in your QuickBooks, it should replicate whatever is on this W-9 once you get it from them. It shouldn't be abbreviated. It shouldn't be a shortcut. It shouldn't have any other information what they give you, because then when you file their 1099 in the future, you have it all correct per the W-9. Then they're going to check one of these boxes down here. These are the boxes that are the most important part aside from the information ITIN number. So this is going to say, are they a sole proprietor? Are they a C corporation? Are they an S corporation? Are they a partnership, or are they a trust or a state entity? Or are they other? And sometimes people will have some very specific scenarios and they have to fill that in. You also can have this option. The LLC is taxed. I'm an LLC, but I'm taxed as an S corp, corporation, or partnership, and they have to fill in that letter here. If you get this form back, and I've seen this many times, and they filled everything out but haven't checked any of these boxes, that's not compliant. You need to ask them to complete the form and check one of the boxes. If they don't, or if you're up against a timeline, you're going to need to assume they're a sole proprietor individual and absolutely 1099 them. Don't take the chance on it on your behalf just because you can't get a hold of them. Again, this is why you want to get this up front, because I promise the closer you get to the end of December and then into January, the harder and harder it is to track people down. Not necessarily because they don't want to give it to you, but they're busy too. They have end of year too. They have New Year's stuff too. They have family, they have vacations, they have all these things going on as well. Not to mention getting you a form that you should have gotten from them in the beginning of time. Also, there are people that don't want to give you the form because they don't want to report their income. The IRS is not stupid, and that is not your problem. You need to then find somebody who is willing to follow the rules, because otherwise it's your butt that's going to get in trouble. And there's eventually, if they're not, properly reporting their income, but on the flip side, you also can get in trouble, and you don't want to put yourself in that position. If they are exempt, they will have codes and they will have this information over here on the side and they will fill it out. If they are, it's because they've made these elections or they've been given these codes and stuff by their entities, and they'll fill it out. If they don't, you're not the W-9 police. You do not have to manage them filling this out properly. Then down here, they'll update their current mailing address. You do want to get this every year from every person because people's entities change, people's names change, people's addresses change. You can't assume that the same guy you've been using every year is going to have the same situation year over year. For example, if he went from being a sole proprietor to an LLC taking the S Corp election, he now no longer uses his social, he uses an EIN. So all of the information on this form, except his address, could be different from year to year to year, depending on his circumstance, his or hers. If your insurances or if your workman's comp requires them to be listed as additionally assured or as the requester, you put that information here. Sometimes when you request these forms, it's to fulfill other compliance related things like insurance requests, and you can put the request there. You don't have to. There's nothing wrong if you don't. Down here, they're going to put either their social security or their EIN in this box, in these boxes for you to use, and they do need to sign it. If it's not signed, but even if it's completely filled out, it's still not compliant. In an audit, it's considered invalid as far as documentation, because you could have just gone in and filled something out and pretended to be the person on file. So they do need to sign it. Electronic signatures are acceptable as long as it's the actual signature of that person. So for example, in Adobe, I was able to go in and kind of on my keypad do my real signature, even though it's digital. That's acceptable, but you typing in or you using like a fancy script text is not an acceptable signature. It has to be theirs, whether or not it's digital. So here, super fun, is a bunch of information that you should probably know and understand about who you should 1099. This is a great tool right here. If the entity or individual on line one is then check the box for information. They are the ones that are supposed to do this, not you, but you can lead them to this instruction page if they come back to you and say, I don't know what to do with this form. They should know what entity type they are, but some people still play the I don't know what to do. Here you go. This is what you do. If you have not gotten a W-9 and you are willing to implement this process, which is the legally what you're supposed to do, you actually have to do what they call backup withholding. Backup withholding means you are withholding a specific amount of taxes from their final payment because you don't have this form on file, and then you are sending that payment into the IRS with a notification that you paid this person, but they didn't give you the form, so here's an estimated tax payment. It is a giant pain in the butt, but that is technically what you're supposed to do to be compliant and to do the thing that keeps you out of hot water in an audit. Nobody's going to want to do that. Your vendor is not going to want to be short paid 20% because of taxes. So they give you this form or they work for someone else is kind of the option. Or you do your backup withholding, and then that's how you get out of needing this form on file if they won't give it to you. So that all the instructions for backup withholding are also here, where to send it, when to do it, how to do it, as well as penalties, failure for civil penalty for false information, criminal penalty for falsifying information, misuse of taxpayer identification numbers. That's all there. Again, it's also on the IRS website. But bottom line, you just want to collect the ding dong form, have it on file, use it, and then here's how you determine if you need to 1099 somebody. Based on their boxes here, you will 1099 an individual or sole proprietor. You will 1099 a partnership, and you will 1099 a single member LLC that is not taking the S Corp or C Corp or partnership election. All of those boxes, that's why those boxes matter, because that tells you who you need to. Even if you don't need to, you're supposed to have the form on file still. As far as categories of what you 1099, anything that's a service, period, is supposed to be 1099, whether it is a business that's providing the service or an individual that's providing a service. As long as they are not S Corp or C Corp, you have to 1099 them. So a consulting service, a bookkeeping service, a landscaping service, babysitters even, if you're paying people to facilitate those types of services so that you could do your job, you are supposed to 1099 them. If you're using your business checking account to pay them, unless you're calling their charges owner's draw, in which case you're not claiming it as a write-off, therefore you don't have to 1099 them. So any business or individual providing a service, you do not have to 1099 for products or materials unless you get an invoice from a vendor that combines the materials and service and labor that they provided to you. Then you do have to 1099 for the full amount, because again, your job is not to police how they invoice you, because their job is to invoice you correctly, which would separate labor and materials. If you don't get the separation, which you would then separate on your accounting, just the labor part and just the materials part, so that you're only 1099ing on labor. If they're not doing that for you, you 1099 for the entire thing, whether or not it's for labor and materials. That way, again, you're in compliance. You're not assuming any right amounts. You're not their police of their invoices, but you're doing your due diligence as far as what you're supposed to do on your end. So 1099s are due January 31st, postmarked. So if you're mailing them, they have to be postmarked by the 31st. If you're emailing them, there are systems in every accounting software as well as individual 1099 reporting systems, and you also may have a accounting professional doing it for you, that as long as their email address is on file, you can email them their W-9, no, excuse me, their 1099, and that's fine too. Does not have to be mailed. It just has to be mailed and or emailed by with a date and time stamp of January 31st. That being said, every single year we file late 1099s for people, because at the end of the day, it is better to have done the thing you're supposed to do and to report the income and to have the proper compliance than to not do it at all. There is technically fees or fines for late 1099s. Never once in 10 years have I ever seen it, nor do I know anyone who has ever seen it. What I have seen and what others have seen is audits that weren't done, that when people didn't do their 1099s, they got in trouble for not doing it late, but just not doing it all. So I hope that helps explain the basis of why and how you determine it. I would love any questions that anybody might have about 1099ing. Also, we do have a free resource on this, and all of the people who registered, I'm going to make sure you get the free resource. It's not currently on our website, but I'll make sure we just email it to you, and it's just a walkthrough step-by-step guide for 1099ing. But I'd love if you have questions, you can throw them in the chat or not. But this means you want to make sure all of your vendor information is correct by the end of this year, which is only 20 days away. So this is why it's important to put a vendor on every single transaction when you're doing your record keeping in QuickBooks, because if you don't have a vendor name and you go to run a vendor report, you have no information on who you're supposed to be 1099ing. So every transaction gets a vendor name, and it needs to match what's on their W-9 so that when you file it, you have the correct information. People all the time get W-9s back because they haven't updated addresses, or the name on the 1099 doesn't match what the IRS has, and so you'll get a notice saying these two things don't match. So that's why you want to collect this information annually. Just put it in like a recurring calendar, event, or just make it part of your process that when you onboard a new vendor every year from onboarding, another W-9 request goes out. That's we have a system and a software to manage all this, but not every business does. So that's the easiest way to do it. Is just as soon as you onboard your new vendor, make that recurring annual request in your system somewhere. I don't see any questions, so make sure you have all of your vendor names, and your accounting doesn't have to be reconciled, but you have to make sure all these vendor checks have cleared. By the way, because the 1099 is a reporting of income earned in this calendar year, you only are going to report as much as has actually cleared the bank. So in December, if you write someone a check and they did not cash it in December, they cashed it in January, that does not go on their W-9 or 1099 for 2025. You're going to hold that over as income earned in 2026, which is the importance of then reconciling every month so you can see uncleared checks and be sure to back that out of their total. Because when you run their totals in QuickBooks, it's going to pick up the check that you wrote that hasn't cleared yet. As a total, and you do not report that amount because it wasn't physically cashed in 2025 in the calendar year. Another important tip to know. And if someone pays you by credit card, you do not 1099 them. So very important for you to separate when you run the reports, make sure you separate which bank account paid this person, because if it was paid by credit card, you do not 1099 them. That is because the credit card companies are also mandated to report income that a company has swiped through them and paid certain people as well. So they take care of that on their end. You take care of it if it's ACH, debit, credit card, or debit card from your bank account, check, any of those, just from the checking account, or cash. Oh my gosh, cash. Let me just touch on that. If you pay someone cash, it does not negate the need for you to 1099 them. In fact, it's even more important so that you have clear records of where that cash went. So you still need to receive a bill from them that you paid them cash. If you withdrew the cash from the bank account, you would actually title that cash with that vendor's name instead of ATM withdraw or something to that effect. You write out the vendor name that you paid that cash with, or you have to split the transaction or whatever your circumstances are there, but you absolutely need to 1099 for cash earned as well. Even if it's an owner's contribution. So if you took that cash out of your back pocket that you took out of your savings account, but you're claiming it as a business write-off, you have to 1099 them. Okay, I think those are all my points. I appreciate everybody joining. and you'll get, like I said, the replay and the free resource, and it'll be available on all of our touch points. Have a great rest of 2025. It's almost over. Our next mini masterclass is set to be on the last Tuesday of the month, since the last Thursday of the month is Christmas, and I promise I will not be doing mini masterclass on Christmas Day. So we will see you in 2 weeks on Tuesday for the next mini masterclass. Have a
Thank you
great,
so much, Sam.
yeah, thank you. Thanks for
Thank you,
joining. I'll
Sam.
see you guys later.
Thank you, Sam.
Bye. You're
Bye-bye.
welcome. Thanks.